All right, good afternoon. Welcome to Trader Minute. Great to have you aboard. Let's go take a look at candlesticks. Some of the trades that are out there, and let's talk about perhaps the biggest question when it comes to candlesticks, and the biggest issue, the biggest concern when it comes to trading candlesticks that has to be answered. Okay, but before we do that, let's go take a look. We did cash out of AUY today. Okay, for those of you just logging on, we did cash out of AUY. We got out at $1.33, so about a 55% gain, somewhere in that area. So worked out nicely here for us. This is one, if you remember, we got in right back here before the jump up, and a lot of that wasn't so much the candle that was created that day, but we were reacting to the candle that was created 3 days prior. The bullish engulfing, the stock had kind of gone flat, gave us a nice little entry point on a day where there were really no signals in the market, no signals um, really anywhere. And so we used a pass signal. We may have to do that today. I mean, today there aren't very many signals out there. It's a low volume Monday. And I expect the volumes to pick up a little bit into the close, but really everyone's looking at Apple and saying, "All right, what's Apple going to do?" And not a whole lot of trading activity going on out there. We are still in the XLE for the candlestick challenge. Okay, if you'll notice here, we got into the XLE because of this island reversal action that happened here. It's now kind of gone up on us 3 days in a row, just small, low volume upticks. This is not uncommon. It's not super uncommon to have happen. 86.5 was our stopping point originally, and we talked when we entered the trade how, that was going to kind of be a little ambiguous simply for the fact that we're talking about this gap down that we were selling into, and to come and fill that gap, would be very common. Wouldn't necessarily be bullish, and in fact would actually make me want to short more of it. And that's really when we look at the XLE. The way I'm looking at it is I'd rather get short more of it with an 87 stop than to be exiting right here. And so we'll keep that on. But the XLE brings up a great question. And it brings up a question that was asked to me via email, and I want to talk about it today. When it comes to candlestick trading, okay, if it comes to candlestick trading, the question is confirmation or no? Do we want confirmation? Do we want some sort of confirmation that the trade is going to work? Do we want some sort of confirmation that it is right there, or are we too late by the time we get confirmation? Okay. Let's take a look at a couple. Let's take a look at a couple stocks. Let's go with Newmont Mining. Okay, Newmont Mining here had this very nice bullish activity here over the past 2 weeks. Pulled back last Wednesday, Thursday, kind of a harami. Friday, no real action. Today, getting a little bit of an uptick. But what do we have the strong potential for? You got it, a rising three methods, right? We break out above 2860, okay, 2850 here. We have a bullish rising three methods that would, basically signal that we're probably going up into the 30-31 area. So the question is, do we wait for confirmation? Okay, do we wait for confirmation? In general, okay, and this is a question that not only do candlestick traders have to ask, but any technical traders have to ask. But in general, waiting for confirmation increases the risk on a trade and decreases the reward potential. But it increases the accuracy of the trade. Okay. So waiting for confirmation will increase the risk on a trade and decrease the reward potential, but it will also increase the accuracy. Okay. So we sacrifice a little bit of reward. We increase our risk in order to maybe get something that might be a little bit more accurate. Let's go take a look at let's try Las Vegas Sands. Type it correctly here. Let's type Las Vegas Sands. Okay. I'm gonna annotate this. And we had a pretty interesting hammer candle that came in on Las Vegas Sands here. Okay, a pretty interesting hammer and a bearish candlestick. Okay, bearish candlestick. And you say to yourself, okay, do I short it up here, 72.5, or do I wait for confirmation? You say, well, it's a bearish hammer, so I have a confirmed trade if it trades below the low of that bearish hammer. Okay, great. You have a confirmed trade if it trades below about 70.20. Well, it's not there yet. If LVS trades below 70.20, where do you put your stop? Okay, where do you put your stop? Well, you're probably putting it up here, a little up above 72 is about where it would make the most sense. So by the time you're getting into this trade, you now have $2 of risk, but chances of you being right are increased, and you're probably coming back down here towards 67, 68. At the same time, okay, here, you can get into it on the candle. All right, here's the hammer candle. It's up here at 72.25. Well, you get in short here. Now with it at 71, hey, you already have a nice profit. You still use 72 as your stopping point. You have a nice profit already, and then if it breaks down, you only have more profit to gain. So by getting into it right on this hammer candle, you theoretically have less risk and greater reward potential. If you wait for confirmation and for that hammer candle to get broken, you now have more risk and less confirmation. Let's take a look. Let's go find another example here. Let's just take this action right here. Okay, let's take this action right here. You basically have a kicking candle action. Not a true bullish engulfing, but you say to yourself, okay, we have the bullish action here. Where do you get in? Well, you could wait till up here. But the longer you continue to wait, the more confirmation you get, but the more risk you have. Take a look at this bullish engulfing right here in October. Okay. All right. Go ahead. You say, all right, we have a very bullish candle. Let's get in. Well, where's your risk? Well, your risk is at the low of this bullish engulfing. You're getting in there. You have a $2 risk. And 5 days later, you're now getting wiped out right near the bottoms. Had you waited for confirmation, waited for a 3-day candle pattern, and then a confirmed close above this bullish engulfing high, had you waited for the confirmation to happen up here around 67, you would have avoided all that. And there are many cases and many instances with technical and candlestick trading where you could say, hey, I should have waited for confirmation. Or you could say, hey, I'm sure glad I didn't wait for confirmation. I was able to book a lot more profit. Here's Lennar. Lennar today, with a bearish hammer coming in play, went all the way up, hit the 200-day moving average, weakening. We had some pretty bad existing home sales data this morning. You can say to yourself, all right, do I wait for confirmation on Lennar? Do I wait and say, you know what? If Lennar breaks below 36, we will have a bearish breakaway pattern that breaks below 36, and we have a confirmed bearish top, and we can play for a pullback. Okay, where are you playing for the pullback? 34 and a half, 34 on a break of 36. Okay. But if you're waiting for the break of 36, then you also have more risk. Because let's say you use 37 as your stop. You now have $1 risk. If you get in right here, you only have about 40 cents risk. In fact, you can actually make it so that your stop is a little bit looser, so that you don't have to worry about getting stopped out on a tight stop. But you don't have the confirmation of the candlestick pattern yet. You have that potential coming, but not the confirmation. And this is where technical traders can get frustrated. Let's take a look right here at Lennar. Take a look here in the beginning of September. Okay, we get this big up move, big bullish candle here, bullish action, and then we get a dark cloud candle. Tends to have bearish implications happening near the upper Bollinger Band, and you say, you know what? Chances are it's going lower. Let's not wait for confirmation. Let's get in. The next day, ouch. You're blown out of the trade. Okay, well, then we get the similar action here mid-September. We get the same type of dark cloud candle the next day where we have the gap up and we erase some of the previous days. You say to yourself, well, I'm going to wait for confirmation. Well, where do you get confirmation? Well, you get confirmation once the low of that bullish engulfing candle is broken. Well, you get confirmation now down here below 35. You've now awaited confirmation. You're in below here at 35, and boom, it popped back up on you the next day. And you say, why'd I wait for confirmation? I could have been taking profit down here instead of waiting for confirmation and finally entering down here. And it's a big old catch-22 because you can find just as many examples where waiting for confirmation paid off as you can find as where anticipating the original signal really paid off. This comes down to how aggressive you want to be in your market environment, okay? Your overall market environment. And this is one of the reasons why I look at the markets every day and I actually care what the S&P 500 is doing. You know, from an hourly perspective this morning, I got a great bearish signal on Bank of America. A fantastic one. Breaking the 7-hour moving average after hitting the upper band, but I couldn't justify going after it because of the broader market. The broader market has just been holding up really well. And so for as bearish as I am on the technicals with Bank of America, and as much as I think Bank of America comes back down here to 14, it's just a little bit tougher to trust. And I want a clearer, more confirmed signal if I'm going contrary to the market. So this is one of those things you have to ask yourself when you're trading anything technical, and even more so with candlesticks. I love the price action on Lennar. Lennar closes here. I think it's a fantastic short. Is it necessarily going to work? No. Okay, I don't have all the confirmation that I need for a bearish breakaway pattern. But if I get in here, overall I have a little bit less risk, and I have a little bit more reward potential. Let's take Las Vegas. Let's take Las Vegas Sands. I mean, here we have a bearish breakaway going on after the hammer candle. We have good volumes. Even from technical indicator standpoint, we have some bearishness going on here. Do we wait for confirmation? Wait for 70.50 to break? Well, 70.50 breaks, we're probably going to be right. We're probably going to get pullback back to about 68.5, 68. But if we're entering when a 70.50 breaks, we have a little bit more risk on the trade. We have a little bit more risk, and we have less reward. So where's that balance? Where do you want to sacrifice the risk reward for confirmation? And that becomes a trader's dilemma for the life of trading. It's one of the things I like about the challenge structure. Okay? When I'm heavy with gains on the challenge, on the 100K challenge, and those of you who've been in some of the winning challenges with me have seen this. When I have strong gains in the challenge, I'm much more willing to go and short a Las Vegas Sands right here and get that better risk reward and less confirmation. When I don't have the gains, I'm having to play a little more conservative. I need the confirmation. I need better confirmation. So something like DLT, where I get the confirmation. Yeah, my risk reward isn't as good, but I have the confirmation there. Okay, the bullish confirmation. And so as we look at the candlesticks, okay, and as we look at these candlestick trades, I mean, XLE, okay, did I wait for a confirmation? Okay. Well, I got the confirmation, right? I got the confirmation on Wednesday. We had the gap down, the closed lower. And even with the confirmation, it's still trickling the other way. So now this makes traders ask, well, should I wait for confirmation and then get a better entry price? And you have two options. You can wait for XLE to rally like it has on low volume. You can say, well, let's short it here with an 87 stop. And if it does do this little low volume rally, you look like a genius. Or if you go and chase it here, well, you know what? We see evidence of chasing bearish signals and just seeing flushing afterwards. We could have seen XLE come all the way down to 83 by today. We could go and look at these technical signals and say, hey, there's evidence that it's just going to go straight down for 2 or 3 days. We also see these examples where it rallies up a little bit. Okay, so whenever we're dealing with candlesticks or technical indicators in general, this is one of the questions we have to ask. Are we willing to sacrifice some risk reward for confirmation, or do we want confirmation so that we're more likely to be right, maybe at a lower risk reward? So think about that, as we go forward. One of the things you'll see on the next challenge is, once I start to lock in some gains, uh, my willingness to go after less confirmed charts will be much greater. Okay, will be much greater. Where right now, where my willingness on the 100K challenge to go after less confirmed charts is a bit lower. Okay? Is absolutely a bit lower. So, as we look at some of the candlestick trades that are potentially setting up here today. Okay, let's take Caterpillar for example. Okay, let's take Caterpillar. We have the big gap down. Okay, then we have this little relief rally. Okay, we break below 84. We don't necessarily have a falling three methods confirmation here. Okay, we don't have that until we break below 83. But by the time we break below 83, it may be too late. So, okay, we have the gap down. We have a potentially bearish pattern here. Do I want to anticipate it just a little bit? And when you understand what the candlestick patterns are and what they can develop into, it leaves you in a much better place, to anticipate and to potentially go after, some of the candlesticks that you know, may not be as confirmed as they would at some other point in time. Take a look at Mosaic. Okay, here's one. If Mosaic were to close below 46 today, okay, which, we're still a ways off. We need about a 50-cent sell-off. But if it were to close below 46 today, would create a dark cloud candle. Okay, would create a very bearish dark cloud candle, similar to this action back here in the middle of September. Question is, do we go after it? Do we go after it? Well, by going after it below 46, yeah, we don't necessarily have the confirmation that we would if it were below 45, but we have a better entry point from a risk-reward standpoint. Bank of America, which we already looked at on a short-term hourly basis, but take a look at Bank of America. Bank of America, okay, had this strong breakaway, bearish breakaway candle, right? We have the upside here, then we have the bearish breakdown, bearish breakaway pattern. Now we get these three low volume, micro volume uptick candles. Today, do we go short Bank of America because of the bearish breakaway pattern that happened a week and a half ago? Our risk reward's better than what it was 3 days ago. We don't really have any new bullish confirmed pattern here. Or do we say, you know what, this really could jump all the way back up into 15 and a half, and maybe we get a better sign to short it there. Okay, so you hear a lot of the questions that are there, but that's what will happen within some of these choppier periods is, you'll get these moves that, yes, they're bullish because the price is going up, but in general, they tend to have bearish resolution. Okay, so on chat today, we mentioned with AK that, hey, you know what, this market itself looks like one of those markets that just wants to bleed higher. It just absolutely just wants to bleed on higher 3 to 4 points every day. And it's one where it's a little bit tougher to trust bearish reversal patterns. Okay. Once we start to see a whole bunch of stocks creating bearish reversal patterns, it will be a lot easier to trust. So for now, with the market bleeding like this, I want to be, hey, I need to trust a little bit more of the bullish continuation patterns. Okay, some of the things like the AUYs, some of the things like, even what Newmont is doing here today. Some of the things in the consumer staples. And while yes, I can have an XLE because the pattern is so bearish, I don't necessarily want two XLEs, right? I don't want to go and take all my money and go after a bearish pattern out here. Where if the market itself were starting to break down a little bit, saw this type of pattern, I'd be willing to go after it a lot more aggressively. So on any trade, on your next trade that you make, okay, think about this. Are you waiting for confirmation? What's that doing to the risk reward? What's that doing to the potential accuracy? Do you really need to wait for confirmation? Or is your stop point so good that you say, you know what? Even if it only works 2 times out of 10, you're still making money. This question comes when you're dealing with Vibe and Trend Rider, but it really comes a lot more when you're dealing with candlesticks. Bottom line, candlesticks 2010, 2011, extremely accurate because they had a lot of follow through. You could use the 1 day candlestick patterns, the engulfings, the dark clouds, the piercing lines, the hammers. You could use the 1 day patterns because they typically had follow through. You didn't have to wait for confirmation because the market itself was so up and down. 2013, 2013, a lot of bearish candles have needed confirmation, while a lot of bullish candles have not. So keep that in mind. Do I think that continues? Well, not forever. How long does that continue? Well, we're seeing it come off a little bit. Bearish candles are starting to work a little bit better overall, but that's a product of the environment. And so as we look to set up the next trade, right? And one of my favorites out there is Lennar. Uh, I keep watching Lennar, keep looking for an entry. We saw it bearish back here. We saw some bullish activity. A little bit later in October. Now we're seeing some bearish activity off the 200. Okay. Um, with Lennar today, do we look for confirmation or do we go for it? Having locked in a little bit of gain on AUY, all right, I'm a little more willing to go for it. A little bit more willing to go for it and say, you know what, we may not have the best confirmation, but we have a nice bearish pattern overall. We have a good stopping point. Let's go. Okay. So as we head into the close, Lennar, Newmont Mining, okay, Lennar for puts, Newmont Mining for calls. Still very bullish on the mining sector in general here. And then looking also at Las Vegas Sands for potential puts. Okay. Now, there aren't a whole lot of fresh signals here today. There are not a whole lot of fresh candlestick signals, but there are signals that are from last week. Not really from Friday. Friday was a no volume day. Today's a no volume day. The signals really aren't coming from today. But some of those signals that came in over the past week, I'll be kind of going through my notes as we get closer to the close and saying, all right, you know what, we saw a bearish signal on this stock or we saw a bullish signal on this stock. Do we have an entry on that as we get into the close here today? Kind of similar to what we did with AUY when we entered into AUY. All righty. Well, thanks for hopping on. Carl will be on with you a little bit later. Go through Vibe Trend Rider signals out there. A few nice ones out there that he'll show you, and then we'll be getting into a trade here at the close of the day, and we will talk to you then. Take care.